You think it's about the chart, about the levels, the indicators, the setup. But the truth is, every time you sit down to trade, you're not just facing the market, you're stepping into an arena. And the opponent, it isn't price action, it's you. That hesitation before you click, that voice that second guesses every move, that rush after a win, the spiral after a loss, it's not random, it's not technical, it's personal. Because whether you know it or not, you're wearing masks, masks that whisper when you hesitate, that shout when you break your rules, that tighten around you when the money's on the line. You didn't choose them. Life gave them to you. Fear, control, ego, shame. They've become part of how you trade and how you lose. But what if you could see them, name them, strip them away? What kind of trader would remain? This isn't about becoming someone else. It's about trading without performance, without protection, without the need to pretend. Because the truth is, your biggest losses were never about the market. They were about the masks. And today, we're taking them off, one by one. Welcome to the real battle. Welcome to the truth behind. She thought she was trading EURUSD. Support and resistance, moving averages, clean structure, clean setups. 6 months into her trading journal, she flipped through the pages expecting to find insights on the market. But what she found was herself. Every entry was less about price action and more about emotion. I jumped in too early, felt like I missed out. Held this one too long, wanted to be right. Skipped this setup, didn't feel ready. Not one page spoke to the chart. Every page whispered her story of fear, of doubt, of trying to control what she couldn't. She realized the market hadn't been testing her edge. It had been reflecting her state. Because this is the mirror trade, the first mask, the one that reveals them all. The mirror trade doesn't look like sabotage. It looks like analysis, like you're doing everything right, planning, journaling, reviewing. But beneath it all is a quiet distortion. You think you're reacting to market signals, but really, you're reacting to emotional ones. And the problem? You don't even realize you're doing it. Because this mask is silent. It shows up in hesitation, right at the moment of opportunity. It shows up in overtrading right after a loss bruises your ego. It shows up in early exits, in doubled risk, in missed entries. And it always comes with a reason that sounds logical. But it's not logic, it's projection. You're not seeing the chart clearly. You're seeing your wounds, your fears, your unmet needs painted onto the screen like a Rorschach test. Daniel Kahneman, Nobel-winning psychologist, called this projection bias. We assume our future decisions will match our current emotional state. So if we feel anxious, we expect the market to turn against us. If we feel confident, we see confirmation everywhere. And that's the danger, because price is neutral, but the way we interpret it is not. Imagine two traders seeing the exact same setup, same chart, same time frame, same rules. One enters calmly, manages risk, follows the plan. The other hesitates, enters late, exits early, feels regret. What changed? Not the market. The mirror did. A trader I worked with was shocked when she changed just one thing. She stopped journaling what the market did and started journaling what she felt. Instead of writing "stop loss hit," she wrote, "I felt embarrassed and impulsively closed." Instead of "breakout failed," she wrote, "I was angry the last trade lost, and I chased this one to feel better." 2 weeks later, the pattern was undeniable. Her losses weren't bad trades, they were emotional trades, disguised as logic. And her winners, they came when she was clear, still, honest, when the voice in her head was quiet enough for her edge to speak. So here's the shift. Before every trade, ask yourself, what am I really trading right now? The setup? Or my need to be right? The signal? Or my fear of missing out? The market? Or my mood? Because price will move the same whether you're clear or confused. But your interpretation, your actions, will not. For the next 10 trades, add this line to your journal. Right now, I'm really trading my need to complete the sentence, be honest. I'm really trading my need to feel smart. I'm really trading my need to recover my last loss. I'm really trading my need to not feel left out. Then use any AI tool, Grok, Claude, even me, to analyze those notes. Prompt it. Analyze the emotional patterns in these entries. You're not looking for market data. You're decoding emotional data. Because in trading, that's what sabotages you most. Here's the science. Your amygdala, your brain's threat center, doesn't know the difference between a red candle and a predator in the wild. It treats both as danger, which means your brain literally tries to survive a pullback. So what do? You exit too soon. Avoid setups that match your plan. Re-enter impulsively or freeze entirely. Not because the chart changed, because your body did, because fear kicked in, and suddenly you weren't trading the market anymore. You were trading the memory of loss, the ghost of self-doubt, the shadow of a past mistake that still hasn't healed. And the deeper truth, you're not reacting to this trade. You're reacting to all the trades before it that wounded you. You're not seeing price movement. You're seeing a mirror of your beliefs, your identity, your history. The market didn't reject you. You rejected yourself. Then look to the chart for proof. Want better trades? Don't just review setups. Review the person clicking the mouse. Ask, was I calm or reactive? Did I follow the process or chase emotion? Did I need this trade to work? Or did I let it go before I clicked? Because the market is not personal, but trading is deeply personal. It reflects who you are under pressure, and that's why the mirror trade matters so much. Studies from UC Berkeley and the journal Nature show this clearly. Traders with high self-awareness, those who journal their inner state, outperform others by 31% and stay in the game longer. Not because their strategy is better, but because their reflection is clearer. So the next time you look at a chart, don't just ask, where's support? Ask, who's showing up to trade this chart? Because your system isn't broken, your psychology is misaligned, and until you see the mirror, you'll keep mistaking your emotions for edge. He did everything right. Every variable was accounted for. Entry rules, specific. Risk per trade, calculated. Position sizing, flawless. Contingencies, he had contingencies for his contingencies. He wasn't guessing, he was prepared. He wasn't impulsive, he was methodical. Every box checked. But then the trade went live, and within seconds, it all unraveled. The chart twitched, price fluttered near his stop, and suddenly logic dissolved. His hand hovered over the mouse. His breathing shortened. Tighten the stop. Wait. Widen it. Move it, just in case. The plan? Forgotten. The control? Absolute. Except it wasn't. This is the mask of control. The illusion that if you plan enough, prepare enough, protect enough, you won't have to feel uncertain. It whispers, if I just analyze more, if I just fine-tune my entry, if I just master this one system, then I'll never have to face randomness again. It's seductive because it promises what trading will never deliver, certainty. But here's the truth. Control isn't power. It's fear, dressed in performance. Ellen Langer, the Harvard psychologist behind the term illusion of control, proved it. Humans regularly believe they can influence outcomes that are completely random. In one famous study, participants threw dice harder when they wanted high numbers, softer for low. Sound ridiculous? Not if you've ever stared at your screen and thought, if I click it now, maybe I can make it go. Control isn't about outcomes, it's about comfort. And in trading, comfort is a trap. I once worked with a trader who was brilliant. Technically, she could explain volatility models like poetry, but when her trade went green, she panicked. When it went red, she panicked more. She kept adjusting, rechecking, not out of analysis, but out of terror. When we traced it back, the source wasn't the market. It was her childhood. She grew up in chaos, alcoholic parent, violent nights. For her, planning wasn't strategy, it was survival. Her spreadsheets weren't tools, they were armor. The market wasn't just risk, it was danger. So she clung to control like a life raft, and it nearly drowned her account. Here's what you need to understand. Control and preparation are not the same. Preparation is wise. Control is compulsive. Preparation says, I've done my part. Now I trust the process. Control says, if I don't micromanage every tick, I'm not safe. But the market isn't a test you can study for. It's a storm. And no matter how perfect your plan is, you don't control the wind. Retail data backs it up. According to a study from Axiuri, over 90% of retail traders fail, not because they lack systems, but because they try to control outcomes instead of mastering process. They pour energy into predicting the future instead of managing their response to it. And here's the cost. Every second spent trying to control what's not yours to control is a second you're not improving what is. Your mindset, your rules, your risk. Sports psychologist Dr. Jared Tendler calls this the control paradox. The tighter you grip, the more you slip. Think about it. Try holding water in your hand. Clench your fist, it escapes. Cup your palm, it stays. The market is like water. Try to force it, and it punishes you. Flow with it, and it rewards your patience. Write down what you can actually control in trading. Your entry criteria, your stop loss, your position size, your time of day, your risk per trade. That's it. Everything else, news, spikes, slippage, spreads, out of your hands. Now create a surrender ritual. Before every trade, say out loud, I control my actions. The market controls the outcome. I am at peace with both. Feel the resistance? That's the mask. Let it crack. One trader I coached called it his Zen click. Before every order, he'd place both palms flat on the desk. One deep breath, one mantra. This trade is a question. The market will answer. I don't need to know the answer now. He went from overtrading 40 times a week to 7. And his results? More consistent, less stressful, more flow, less force. Neuroscience explains why this works. The prefrontal cortex, your brain's logic center, fatigues with overuse. The more you try to control outcomes, the faster it burns out. That's why your worst decisions often come at the end of the day. Not because the market changed, because you did. Watch professional traders during a volatile move. They're not panicking, not because they know what's coming, but because they've accepted not knowing. They've made peace with chaos. They don't try to control the market. They work with it. They don't react. They respond. They don't chase certainty. They trust process. So the next time you feel the urge to intervene, to click out early, to move your stop, to just make sure, ask yourself, am I managing my plan or am I trying to manage the market? Because the market doesn't reward control. It rewards clarity. And clarity only comes from letting go. True power in trading isn't in knowing what will happen. It's in knowing how you'll behave no matter what does. That's the edge. That's where consistency lives. Not in the chart, in your ability to release the outcome and act anyway. She stared at the setup, everything aligned, trend direction, clear, support respected, volume confirmed. The candles whispered, now. But her finger didn't move. She watched, waited, switched time frames, checked the news again, opened Discord, scrolled Twitter. By the time she returned, the entry was gone. The trade had run 40 pips without her. She didn't miss it because the market fooled her. She missed it because fear held the mouse. The mask of fear is the most convincing because it wears 1,000 disguises. I'm being cautious. I just want confirmation. Something feels off. It sounds reasonable, rational, even smart. But underneath, it's not analysis. It's avoidance. Most traders think they're afraid of losing money. They're not. Look at your risk per trade. 1%, maybe 2%. That's not danger. That's math. So what are you afraid of? You're afraid of what the loss will mean, that you're not good enough, that you're not really a trader, that your success was just luck, that the people who doubted you were right all along. Fear in trading isn't about numbers. It's about identity. Dr. Brett Steenbarger calls this the emotional shadow. It's when a trade touches something older than the chart, something deeper than the setup, a memory, a wound, a failure you never fully processed. One trader I worked with hadn't taken a live trade in 6 months. She watched charts daily, logged every setup, knew her system inside out. But every time she hovered over the buy button, her hand trembled, and she'd tell herself, let's wait for more confirmation. But the truth? She wasn't waiting for confirmation. She was waiting to not feel afraid. We traced it back. Years ago, her father lost everything in the dot-com crash. She watched him crumble, emotionally, financially, spiritually, and every time she prepared to enter, her brain whispered, don't become him. Her fear wasn't irrational. It was inherited. And every skip trade wasn't just about E or USD or GBP JPY. It was about legacy, shame, pain. Because here's what fear really is, a defense mechanism. It's not trying to sabotage you. It's trying to protect you from something it thinks might hurt. But the problem? The fear is outdated. It's using old data to make new decisions. And that's why it fails. Research from Investopedia shows that 60 to 70% of new traders miss profitable trades due to fear-based hesitation. And ironically, the more they wait, the more their confidence erodes. Fear creates a feedback loop. You wait to feel safe, miss trade, feel regret, reinforce fear, wait again. It's not discipline. It's paralysis, wearing a suit. Here's what neuroscience says. When you perceive threat, your amygdala hijacks your brain. Stress hormones surge. Your rational cortex, the part that executes logic, goes offline. In other words, you can't outthink fear once it takes control. You have to train your body to coexist with it. So how? You expose yourself. Gently, consistently, like therapy for your nervous system. Quick implementation. The fear ladder. Week 1, trade micro lots, so small it feels insignificant. Week 2, increase slightly. Still low risk. Week 3, return to full size but with tracking. Rate your fear before trade, during, after. Use a scale from 1 to 10, then journal the emotions, not the price action. And before each session, 5 minutes of breath work. Use an app. Use silence. Doesn't matter, because fear can't dominate a nervous system that's already calm. One trader I coached ran this ladder for 30 days. He said something I'll never forget. I realized I wasn't afraid of losing. I was afraid of how I'd treat myself if I did. Let that sink in. It's not the loss that destroys you, it's the shame that follows. And that is the real battle. The market doesn't punish fear, it just ignores it. It moves whether you're scared or not. It doesn't slow down so you can feel better. It doesn't care if you're not ready. So if you're waiting for the fear to disappear before you trade, you'll be waiting forever. Here's the mindset shift. Don't trade without fear. Trade with fear and do it anyway. Because courage isn't a lack of fear. It's action in spite of it. Next time you feel that tightness in your chest, that voice that says, wait, don't fight it. Don't shame it. Just say internally, hello, fear. I know you're trying to help, but I've got this. Invite it in. Then execute. Harvard Business School ran a study where traders were told to reframe fear as excitement. Instead of I'm nervous, they said I'm energized. Result, performance increased by 22%. Same body state, different narrative. Fear is just data. It's not a signal to stop. It's a reminder to focus, to breathe, to be here. So next time you skip a trade, don't just ask, was the setup valid? Ask, was I avoiding risk or avoiding discomfort? Because until you learn to act with fear, not against it, you'll never get consistent. You'll always be hostage to your emotions. The mask of fear promises safety, but delivers stagnation. It protects you from losses, but also from growth. It shields your ego, but shrinks your edge. And if you let it dictate your trades, you'll become a spectator in your own strategy. The most successful traders I know, they still feel fear. They just don't let it drive the car. They ride with it, watch it, smile at it, and then they trade. The notification popped up on his screen. Plus 2.3% on the day. That made 12 green days in a row. He leaned back in his chair, smiling, not because he was surprised, but because he expected it. The room buzzed. Friends messaged, "What's your strategy?" Discord pings lit up. "You've cracked it, man," he replied coolly. "You just gotta feel the market. It's all about rhythm." And he believed it, believed he'd ascended, leveled up, mastered something others were too slow, too scared, or too stupid to understand. 2 weeks later, his account was down 60%. That's how the mask of the winner works. It doesn't shout, it whispers. You've figured it out. You don't need rules anymore. You're beyond the basics now. It seduces you with confirmation. It disguises arrogance as progress. And worst of all, it uses your own success to destroy your discipline. You see, when you're losing, you question everything. You get humble, careful, methodical, but when you're winning, you become blind. Behavioral economist Terence Odian ran the numbers. Traders on winning streaks increase their trade frequency by 70% and their position size by 45%. And they give back profits 3x faster than they made them. Because each win isn't just a result, it's a dopamine hit. And dopamine doesn't just make you feel good, it rewires your brain. It tells you, do more of that. Whatever that was, chase it, even if what you did was reckless. Even if it only worked because of variance. Even if it violates everything your edge stands for. I once coached a trader who kept immaculate logs. During drawdowns, he followed every rule like gospel, entry checklists, tight risk, daily reviews. But during hot streaks, different person, skip checklists, over-leveraged, stacked entries, no journaling, no review. And guess what? His biggest drawdowns didn't come from losses. They came from wins and what they turned him into. That's the thing about the winner's mask. It feels like confidence, but it's really entitlement. Jared Tendler calls this entitlement tilt in his book, The Mental Game of Trading. You start believing the market owes you, that rules are for amateurs, that discipline is optional because you've earned the right to improvise. But the market doesn't care how many green trades you've had. It doesn't remember your wins, only you do. And that memory becomes your greatest liability. A study from MIT showed that traders were 23% more likely to break risk rules after a winning streak than after a losing one. Let that sink in. Winning literally makes you dumber because ego doesn't grow in failure, it grows in success. And ego is expensive. Here's the neuroscience. Dopamine increases impulsivity. It decreases activity in the prefrontal cortex, your logic center. So when you're riding high, you're less capable of objective decision making. That's why you overtrade, oversize, overestimate your skill, not because you've suddenly lost your edge, but because you've lost your awareness. And it's subtle. You don't say, I'm better than the market. You say, I'll just take this quick one. This setup's close enough. I'm on a roll. Let's keep going. That's the mask talking, because no matter how many times you say just one more, it's never just one. One trader I knew had his best month ever, up 38%. He printed the statement, framed it, hung it on the wall above his desk. The next month, he gave it all back. And now, that same frame holds his worst month. Not out of shame, but remembrance, because nothing humbles you faster than the market when you start thinking you're above it. Quick implementation. Create a winning streak protocol. This isn't punishment. It's athletic periodization, like Olympic coaches use. After 3 consecutive green trades, day 1, reduce position size by 25%. Day 2, rewrite your rules by hand. Day 3, sim trade only. Focus on process. Install an app that tracks streaks. Use it as your humility alarm. You're not suppressing confidence. You're containing ego. One trader I mentored used to text me after 3 wins. Coach, it's day 3. I'm on the bench. He called it earning the bench, because pros know discipline isn't just for bad days, it's especially for the good ones. And here's the paradox. The more humble you become in victory, the longer the wins last, because ego burns fast, but awareness endures. The trader who can look at a 10% week and say, that's variance, not genius, is the one who survives. The market is a mirror. When you win, it reflects your method. But the second you start believing it reflects your superiority, the market will remind you who it really belongs to. Everyone and no one. So the next time you're riding a hot streak, ask yourself, am I still respecting the system that got me here? Or have I started believing I am the system? Because that shift is when the mask slips on, quietly, proudly, fatally. Remember this, winning doesn't make you better, it makes you vulnerable. Because when everything feels easy, that's when the most damage begins. Not because you lost, but because you forgot how you win. Let your edge speak, not your ego. Let your discipline continue, not your dopamine. Let your process shine, especially when profits are flowing, because the market doesn't reward confidence. It rewards consistency, and that only lives beyond the mask. The loss itself wasn't catastrophic. She'd taken losses before. This one was well-sized, within plan, a textbook setup. But something about it felt different. A long upper wick, a sudden spike, stopped her out by less than a pip before reversing perfectly without her. She sat there, jaw clenched, breathing shallow, heart pounding. The market hadn't just moved, it had mocked her. And in that moment, something shifted. She wasn't a trader anymore. She was a fighter. The mouse moved almost on its own. Double position size, no setup, no plan. Market buy, click. Her logic was gone. Her risk controls gone. Her identity replaced by rage. By rage. This is the mask of revenge. It's the mask that turns a probability event into a personal war. It whispers, the market did this to you. Take back what's yours. Make it pay. And in that state, you're no longer trading. You're retaliating, not with a strategy, but with a wound. Behavioral finance research shows that revenge trading is one of the top causes of total account loss. Reddit forums, trader communities, even professional desks are full of stories that start with a loss and end with bankruptcy. Why? Because revenge activates the fight part of your brain. Literally. Neuroscience confirms it. Revenge trading triggers the same brain circuits as physical combat. Your body prepares for battle. Adrenaline surges, cortisol spikes. Prefrontal cortex, your logic center, goes dark. And when that happens, you're not evaluating. You're not managing risk. You're not thinking. You're surviving. But here's the truth. The market didn't attack you. It didn't single you out, didn't hunt your stop, didn't care that you were even there. It just moved. You lost. And instead of processing the loss, you tried to erase it. That's the trap. You don't want recovery. You want redemption. And redemption has no risk management. I once worked with a trader who lost $60,000 in a single afternoon. He started with a 2-cow loss on a clean setup. Then he doubled size. Then again, within 3 hours, he was maxed out, sweating, clicking blindly. He wasn't trying to trade anymore. He was trying to prove something to the market, to his broker, to himself. His journal entry that night, I don't even remember clicking. I just wanted to feel not powerless. That's what revenge is. It's pain trying to heal itself with more pain. It's your ego trying to rewrite history. But the market doesn't trade in apologies. It only trades in probabilities. Dr. Denise Shull calls this affective looping. The brain fixates on an emotional event and keeps replaying it, demanding resolution. But trading doesn't offer resolution. It offers opportunity. If you try to resolve your emotions through a trade, you lose both the money and the clarity. Because the revenge trade isn't about the market. It's about every time you were made to feel small and couldn't fight back. The boss that humiliated you, the partner who doubted you, the friend who outperformed you. You swallow it, push it down until the market triggers it, and suddenly it all comes rushing back. You're not fighting price, you're fighting ghosts. Quick implementation, the revenge breaker. After any loss over 1%, close your platform immediately. Set a timer, 30 minutes. Perform box breathing used by Navy SEALs. 4 seconds inhale, 4 hold, 4 exhale, 4 hold. Repeat 10 times. Then write a letter to the market. Pour out your frustration, your anger, your grief. Say everything you need to say, then delete it or burn it. This isn't fluff, it's neurological reset. You're discharging the emotional energy without transferring it into action. Then ask yourself, can I take the next trade as a separate event, not connected to the loss, not charged with meaning, not a fight, just a trade? If not, stay out, because revenge doesn't need discipline, it needs distance. One trader I worked with started keeping a rage log. Every time he felt the pull to get it back, he logged it. After 30 days, the pattern was clear. My revenge trades always started with self-blame and ended with self-destruction. He realized he wasn't trading to win. He was trading to punish himself for losing. Here's the truth. The market doesn't need to forgive you, but you do, because until you forgive the loss, you can't let it go. And until you let it go, it's driving your next click. Forgive yourself for the revenge trade, not because it was okay, but because it was human. You're wired for retaliation. But trading is not a battlefield. It's a mirror. And if you want to win, you have to stop swinging at your reflection. A study from the University of Cambridge found that traders who practiced acceptance-based mindfulness reduced revenge trading by 73%, not by suppressing the urge, by noticing it, acknowledging it, and choosing not to act on it. The best traders I know, they feel the sting, they journal it, then they trade the next setup, not the last scar. They don't seek revenge, they seek rhythm. So next time you feel that heat rising, that tightness in your chest, that urge to get it back, pause. Ask yourself, am I trading this setup or am I trying to repair something emotional with money? Because if it's the second one, step away. You don't need resolution, you need restoration. And that only comes when you let the market be what it is, impersonal, indifferent, unmoved, just like a mirror. The trade closed, small loss. It was within plan, risk managed, setup followed, nothing went wrong. But the voice didn't care. You idiot, you always do this, can't even follow your own rules. Maybe you're just not cut out for this. The screen faded to black. The voice didn't. It kept going, relentless, sharp, precise, not loud, but constant. And he didn't even notice it at first, because he thought it was just thinking. This is the mask of the inner voice. It's not a scream, it's a whisper, a narrative, a background track, always playing, always judging. You don't remember putting it on because it's been with you longer than trading has, maybe longer than you've been conscious of yourself. And that's what makes this mask so dangerous. You don't know it's there, but it shapes everything. Dr. Brett Steenbarger found that negative self-talk correlates with a 34% decrease in trading performance. But here's the kicker. 91% of traders aren't even aware they're doing it. Because the voice isn't just negative, it's familiar. So familiar, in fact, that it sounds like you. I once asked a struggling trader to do something unusual. Don't screen record the charts. Record yourself, your words, your muttering, your reactions during a live session. He did, and when he played it back, silence, then tears. His voice on the recording, you're a fraud. No wonder you keep failing. This is why you'll never make it. He looked at me and said, I sound exactly like my father. That's when it clicked. He wasn't just battling the market. He was battling a voice that had lived in his head since he was 8 years old. A voice that told him, you're never enough. You'll never get it right. You're a disappointment. And every losing trade, just more evidence. You see, the market doesn't just test your strategy. It awakens your shame. That's why a 1% stop loss can feel like a life sentence, not because of the money, but because of the meaning you attach to it. Neuroscientist Dr. Ethan Kross discovered that negative self talk lights up the same brain regions as physical pain. In other words, you're literally hurting yourself with your own words. Every insult, every self directed jab, every internal attack, your brain feels it, your body absorbs it, and your trading suffers for it. The voice doesn't stop when you journal. It doesn't rest after a win. In fact, sometimes it gets louder after success. You got lucky. You'll screw it up tomorrow. Don't get comfortable. Because here's the truth: the inner voice doesn't want you to grow, it wants you to stay safe. And in its world, safety equals control, equals self criticism. It thinks if it beats you down first, you won't have to face external failure later. It believes shame is a motivator, that pressure equals progress. But that's not how high performance works. That's how burnout happens. That's how sabotage happens. Quick implementation: the voice log. For 1 week, track your self talk in real time. Split your journal into 3 columns: what I said to myself, who taught me to say that, what would I say to my best friend in this situation. At the end of the week, calculate your criticism ratio: negative comments versus constructive ones. Then begin interruption training. Every time you catch a negative thought, immediately state 3 neutral facts. I followed my plan. The loss was within risk. This is normal variance. This isn't positive thinking. It's accurate thinking. It's rewiring your default response from judgment to observation, from shame to awareness. One trader I coached cut his emotional spirals by 50%, not by trading better, but by talking to himself differently. He started narrating his sessions out loud. And instead of "I'm such an idiot," he'd say, "Okay, that didn't work. Why? Not emotionally, neutrally." Dr. Kristen Neff's research on self-compassion shows it outperforms self-criticism in every measurable way. Her studies show plus 23% improvement in performance, minus 16% in emotional volatility. That's a 39% swing just by changing how you speak to yourself. And here's one more trick: change pronouns. Instead of saying "I'm failing," say "you're learning." Sounds odd? The University of Michigan ran a study showing that using second person, you, reduces emotional intensity by up to 50%. Why? Because it creates space, distance from the emotion. And that space is where clarity lives. The best traders in the world, their inner voice is quiet, firm but calm, disciplined but fair. It says, "That didn't work. What's the lesson? You stuck to your rules. Good. Back to process," because they know the market is hard enough already. They don't need to make it harder by turning against themselves. Your edge isn't just in your system. It's in the space between stimulus and response, between "that loss happened and I'm a failure," between "I missed the trade and I'm worthless." That space is where freedom is, and that space is controlled by the voice inside. So next time you hear that familiar critic rise up, don't argue, don't obey, just notice. Say, "Thanks for your opinion, but I'm trading now," and return to the facts. Same desk, same screens, same blinking candles. But today, something had shifted. She wasn't trying to control the trade, wasn't waiting to feel fearless, wasn't proving anything to anyone, not to her mentor, not to her journal, not even to herself. She was just here. One trade stopped out. She nodded, wrote it down, moved on. Next trade hit target. Same nod, same note, same moving on. No celebration, no spiral. For the first time in her trading life, she wasn't performing. She was trading. This is the unmasked gladiator. Not a superhuman, not a guru, not a cold, emotionless machine, but a trader who no longer needs the mask. Because they finally realized they never needed it in the first place. The gladiator doesn't fight the market. They don't fight themselves. They don't fight to be right or perfect or impressive. They fight for truth, the truth of their system, the truth of their discipline, the truth of who they are when no one's watching. You see, the journey through the masks wasn't about improvement. It was about removal. You didn't need to become a different person. You needed to stop being someone you're not. You didn't need to trade without fear. You needed to trade without identifying with fear. You didn't need total control. You needed trust. Psychologist Mihaly Csikszentmihalyi called this the flow state, a moment where self-consciousness disappears and only presence remains. That's where the gladiator lives. Not in the future, not in the outcome, right here, in the breath before the click, in the stillness between candles, in the acceptance of uncertainty. I remember working with a trader who said, for the first 2 years, I was obsessed with finding the perfect system. Then I realized the real system I needed to build was me, not better indicators, a better internal environment, not more backtests, more self awareness. A longitudinal study of professional traders found that those who scored highest on authentic self expression had 31% better risk adjusted returns and 50% longer careers. Not because they were better at charts, but because they stopped burning energy on performance and started investing that energy into process. The gladiator doesn't need to win, they need to honor their edge. They don't chase setups to feel good, they wait patiently for their system to speak. And when it doesn't, they don't panic. They rest, reset, return, because they're not addicted to action. They're anchored in alignment. So, how do you get there? Quick implementation. Write your trading identity statement, not your goals, not your strategy, but your identity, the version of you who trades without the mask. Write it as if you already are that person. I am someone who trades from process, not emotion. I execute with discipline and accept with grace. I don't need to be right. I need to be present. Read it before each session, out loud. Let it become the voice that replaces the critic, the truth that replaces the fear. And here's the advanced step. Create a mask check-in ritual. Before every session, rate yourself from 1 to 10 on each mask. Mirror projection, control, fear, ego, revenge, inner critic. If one's spiking, adjust. Maybe you trade smaller. Maybe you just journal. Maybe you sit out entirely. That's not weakness. That's mastery. Professional athletes do this. Why not professional traders? Because trading without a mask isn't the end. It's the beginning of real growth, real consistency, real emotional freedom. And no, it doesn't mean the masks disappear forever. They still visit. The control freak whispers, the fear stirs, the ego swells, but the gladiator sees them coming, names them, smiles, and chooses differently. You stop reacting to the market and start responding from your values. You stop needing to prove yourself and start expressing your edge. You stop assigning meaning to every trade and start showing up for the craft itself. One trader I coached kept a sticky note on his screen. This trade does not define me. My discipline does. That's it. That's the gladiator's creed. And yes, you'll still fall. You'll still lose, still hesitate, still feel the sting. But now you'll stand back up without the shame because you're not performing anymore. You're practicing, and practice over time becomes power. So ask yourself, who am I without the mask? Not the version chasing streaks, not the one hiding from fear, not the one obsessing over being right, but the one who's honest, the one who trades without performance, without pretense, without needing every outcome to mean something. Because once you meet that trader, you never want to trade any other way again. Final research drop. A Harvard Business Review study found that people who cover aspects of themselves at work, who hide or perform, experience 25 to 30% lower productivity. In trading, where you're both the boss and the employee, that number multiplies because every ounce of energy you spend performing is energy you're not using to execute. The unmasked gladiator gets that. They've dropped the performance and picked up presence. So next time you feel that urge to be someone, to prove, to impress, to outperform, remember this. You don't need to be perfect. You need to be real because the market doesn't reward image. It rewards integrity. So here you are, 7 masks behind you, not just in trading, but in yourself. You've walked through fear, ego, control, shame. You've watched your own mind turn setups into stories. You've seen how the real battlefield wasn't the market, it was the space between your thoughts. And now the question isn't, what's the best system? It's, what system lets me trade as who I actually am? Because the trader you've been trying to become, the one who never hesitates, never overtrades, never doubts, that version of you doesn't appear through motivation. He or she appears through alignment, alignment with your rhythm, your energy, your psychology, your reality. You thought more discipline was the answer, but what you really needed was awareness. You thought execution was a logic problem, but it turned out it was a nervous system problem. You thought you were trading the market, but you were really trading a version of you that was trying so hard to be in control, they forgot what freedom felt like. And here's the twist. There's an 8th mask, the most invisible of them all. The mask that says, one day, I'll finally arrive. That if you just fix everything, optimize enough, heal enough, then you'll trade perfectly. That mask is the illusion of arrival, but the unmasked trader knows you don't arrive, you practice, you become, one trade at a time. So, no, you won't be fearless tomorrow, you won't be flawless next week, but you'll be aware. And that awareness, that's the edge, not just in trading, but in everything. Because the way you trade under pressure is the way you live under pressure. And if you can stay honest here, where money, ego, and fear collide, you can stay honest anywhere. So take off the mask, not because you've solved it all, but because you're ready to meet yourself in the arena as you are, clear, human, real. And that is what mastery looks like.